Welcome, it's Denome. In this video I want to talk about the biggest weakness of the Bitcoin and the Bitcoin network. And no, it is not regulation, it's not the politicians, it is actually something to do with the protocol itself and how Bitcoins are mined. And it's called a 51% attack. And at this point you might be thinking, oh yeah, I've already heard about this. It's only a theoretical issue, it will never happen, don't worry about it. But in this video, I want to explain and also theorize how it could happen even to Bitcoin. And it's not only Bitcoin that is vulnerable to this 51% attack. It has happened before, for example, for Ethereum Classic just 2 years ago. And there was a 4,000 block long reorganization from this attack. And there was also attacks on Bitcoin Cash where two miners actually join together to execute this 51% attack on Bitcoin Cash. So this does happen for the, smaller blockchains. And people say it's not that big of a deal for Bitcoin because it has much more computing power, much more hash rate than these other chains out there. But anyway, before I actually explain exactly how this could happen, let's first talk about what this 51% attack is and what it means. So if you have 51% of the computing power, 51% of the hash rate of the network, then you can mine these blocks in the blockchain faster than the rest 49%. And when you have that kind of power, you basically generate all the revenue for yourself. So you make more money than the other miners, and you basically force the other miners out of business because you are generating all the blocks and the other miners will get no reward at all. So that will happen. That's the first thing that will happen. The second thing is that you can actually double spend your Bitcoin. So every time a Bitcoin is mined or a block of Bitcoin is mined here, it is added at the end of the blockchain. And that's basically just a long series of blocks, and that creates the blockchain. And now this white line here, let's call it the legit Bitcoin blockchain. You can make a transaction here, and if you make a transaction, let's say you transfer money from your wallet to an exchange, they usually require like a 3 or 4 or 5 confirmations, which are just another blocks in the blockchain. And after about 5 blocks, the exchange will recognize that yes, you actually made this transaction, it is now confirmed, and now you can actually spend it. But if you have 51% power on the network, what you can do is mine these blocks and not publish it on the public blockchain. And you can mine these as many as you want, and then you can basically backtrack and just publish the blocks on the blockchain. And because you have the longest blockchain, that becomes the truth automatically. So you overwrite all these transactions that have happened here. So what you can do is basically spend your Bitcoin at this price here, and then start generating this extra blockchain. So you can spend all your Bitcoin, and when you publish this black blockchain here, because it is longer, then you can basically spend your Bitcoin again. And that's the first thing, but that's not really the biggest issue here. You can also short Bitcoin, and in the future, as more companies get involved, like MicroStrategy, you can also short those company stocks that have a lot of Bitcoin exposure. Because when this 51% attack happens, the first thing is that basically all the trust is gone, and then there will be a wave of FUD news, everything going out there, which will cause the price of Bitcoin to plummet because people will be trying to sell it as soon as they can, because Bitcoin is supposedly unhackable, but when there's a 51% attack, that illusion basically is gone after that. So those are basically the strategies how you can make money from this 51% attack. And right now, if we take a look at the total hash rate, I don't exactly know how to call this number. Is it 216 million terahash, or how do you call this? I don't exactly know, but anyway, the number is 216, which represents the total computing power in this network. And as you can see, it has been growing all the time as technology improves, and also as there are more miners mining Bitcoin. And right now, if you want to do the 51% attack, you basically have to double this hash rate to about 440. And right now, if you want to execute that strategy, it will be very, very hard because you would have to get all these mining rigs. And right now we have this microchip shortage. There's basically not enough mining rigs out there for you to even do this attack to basically double the power of Bitcoin. But here is where the strategy is actually viable. So if we take a look at this chart here, which shows the price of Bitcoin and also the price of the average price to mine one Bitcoin. So for example, at the end right here, you can see that the Bitcoin price is about $20,000 right now, and the cost to generate one Bitcoin costs about $19,000 or $18,800. So if the price of Bitcoin for whatever reason goes below the average cost to create a Bitcoin, what it means is that the miners are running a loss. And of course, if you are running a loss, you have two choices. You either double down and you sell your Bitcoin reserves or take out a loan, or you stop mining. And if the price is low enough for long enough periods of time, the miners who are running a loss will eventually have to give in and also shut down their mining rigs. And when they actually shut down the mining rigs, the hash rate will go down significantly. Like it did in 2021 here, you can see that the mining hash rate was about 180, and then it dropped down to about 85. So it dropped down by half. I think this event here was actually when China banned Bitcoin mining. I'm not 100% sure, but I think that was the event here. But anyway, the mining hash rate dropped by 50%. And if, let's say, there's a situation where the price of Bitcoin goes to, very, very low. Let's call Bitcoin goes to like $3,000. And last time Bitcoin was $3,000, let's actually go to this chart here. When price was about $3,000 here, $4,000, the miners were actually running a loss at this time here. So miners can still run and generate Bitcoin even though they create Bitcoin at a loss for some periods of time. But lucky for them, the price of Bitcoin started to go up again because people believe in it, people have speculation about it, and of course people want a decentralized currency out there. So anyway, the price went up again, and then the problem went away. And if we take a look at this time here, right about before 2019, the hash rate back then, before the price plummeted, was about 54, and then it dropped to about 40. So about 20-25% drop. So not that significant drop in that scenario either. But right now, let's say the price drops to the same level, about $4,000. If, of course, the technology is better, there are miners out there, but let's say the hash rate also dropped down to about 40. So that would be an 80% drawdown on the hash rate. And let me just draw that here. So if this is the current hash rate, which is the 200, if the hash rate actually drops down to that 40 level, right now we are in a situation where the 51% attack is suddenly theoretically possible, because to generate this 51% attack, only thing you need to do is get another 20% of the existing mining rigs that we have seen that produce this hash rate here. So if you can get 2 or more players together, or how many players ever you need to generate this attack, if you can double the mining rate of that time, then you can create the 51% attack just with this power here. So this kind of strategy requires a lot of concentrated effort and a lot of puzzle pieces to get aligned to happen at the same time. And then you also have to utilize the existing mining rigs here. But with this strategy, where you are basically looking at the price of Bitcoin to go low enough for this strategy to happen, you need much less mining power to actually create this attack. And also you don't have to buy your own rigs or anything like that. You can simply borrow the rigs that these miners have had to shut down. And of course they will borrow the rigs because they want the money. They still have the rigs. Nobody will want to buy them because they would just be running a loss. So you can borrow their mining rigs quite easily, right? Or I don't know if it's easy or hard, but I'm pretty sure if you have enough money, you could get those mining rigs running up again. So suddenly a 51% attack is possible, and it is only related to the price of Bitcoin. If Bitcoin price goes low enough for a long enough period of time, then I think this 51% attack is actually possible. And it has happened before for Ethereum Classic, it has happened for the Bitcoin Cash as well. And right now, you can see also that the revenue that the miners are making, it would go lower with the next halving again, because right now Bitcoin network, it generates about 900 Bitcoin per day. So with the price of $20,000 per Bitcoin, that's about if we round it up to 1,000 Bitcoin per day, then that's about $20 million per day of new Bitcoin that comes to the market, and the market basically has to suck up $20 million per day to keep the price stable. But the inflation is going lower with every 4 years as there's a halving event. So these halving events are usually also situations where miners have to capitulate because they are no longer running a profit if they have to spend too much money on the electricity to keep their mining rigs up and running. So with the next halving, the issuance rate will go from that 1,000 or 900 down to 500 or 450 Bitcoin per day. So miners will be making even less money when the next halving happens. So this problem that we're looking at here right now, I don't think this will happen in the next 4 years or so. I don't think this is viable because there's just so many zealots out there who will run their Bitcoin miners even at a loss. And also a lot of Bitcoin currently is mined with renewable energy, with solar energy. And I think El Salvador even announced that they will be using volcanic energy. And the Senator Ted Cruz in USA, he was saying that some of the industries in Texas could actually generate Bitcoin from the excess energy that they create. I think those were the oil companies when they have to burn some gas to get the... I don't remember how it went, but basically they generate excess heat or excess energy, and they could mine Bitcoin using that excess energy on the spot right there. So even though Bitcoin price drops down to like 3,000 or whatever, I think those kind of businesses will just keep them running because there's really no point of shutting them down because it's just excess revenue that they can generate. So the hash rate will probably not drop as low to create problems right now. But in the future, who knows what happens? The revenue that the miners are making is going lower and lower and lower. And the only thing that keeps this whole thing together is if the price of Bitcoin keeps climbing up and there will be more and more and more buyers. But if the price of Bitcoin doesn't go up as the rewards go lower, then Bitcoin will become more vulnerable to this kind of attack. So in the future, let's say 20 years, 10 years, 30 years, 40 years, 50 years, who knows? Maybe all the puzzle pieces go together and the price drops enough that the hash rate drops just there, that there are one or two players that see this opportunity and actually start attacking Bitcoin. So right now, I would not say this is a problem, but I'm just showing you that theoretically and actually quite reasonably thinking, this 51% attack could also happen on Bitcoin, not just on the smaller blockchains out there, if the puzzle pieces all fit together. And right now, we could also be going there because Bitcoin has never seen a recession, and it definitely has never seen a depression where we are headed right now. And because we have this energy crisis going on, there could be a situation where the governments just start to limit how much energy Bitcoin miners can actually use, and they could ban Bitcoin mining for that reason because they have to get that energy elsewhere. So I don't know how plausible this 51% attack problem is, but I think it is at least 0.5% chance in the future. So yes, I do want the decentralized future, same as Michael Saylor, same as I think most of my viewers as well. But I just want to lay out that how this 51% attack could happen, because I've never seen anyone actually talk about this in this kind of way that I showed in this video. And I only realized this thing about a few weeks ago as well, when I was talking in our Telegram group. And then I had this idea like, hey, wait a minute. What if the hash rate drops significantly? Then the 51% attack could actually happen. That's why I just wanted to make this video as well, just to educate you on the vulnerability of Bitcoin. And this vulnerability could also be patched with an update on the Bitcoin network. I don't know exactly how, but also I'm not part of that kind of technological discussion, but definitely there could be other ways to prevent this kind of attack when it becomes a reasonable threat. So maybe some of the Bitcoin people can see this video and just plan for the future if Bitcoin price goes low enough for a long period of time enough that the hash rate issue actually becomes a real threat. Anyway, I think I've said everything I have about this topic. Yeah, I think so. If you thought this was interesting, leave a comment, drop a like, and maybe consider subscribing to the channel as well. Anyway, that's it for this video. I will see you in the next one. Bye bye.